Okay, let's dive right into this. Welcome back to The Explainer. Today, we are launching a full-on investigation into the multi-billion-dollar AI boom. We're looking at the tech landscape as of May 2026, and honestly, it is completely unprecedented. I mean, the hype is deafening, the capital is just astronomical, and the immense pressure to build the ultimate artificial intelligence is literally breaking companies apart. So today, we're playing tech detective. We're going to examine the evidence, track the money, and uncover this massive, hidden danger that's threatening the very foundation of the industry. It's a phenomenon we're calling the infrastructure trap. And more importantly, we're going to figure out which major AI giant is actually poised to collapse under its weight next.
To really understand the sheer scale of the stakes right now, just take a look at this number. $900 billion. That is the dizzying private market whispers circulating right now regarding Anthropic's valuation as they gear up for a potential IPO. And while their confirmed post-money valuation sits at a staggering $380 billion, this $900 billion chatter perfectly illustrates the absolute frenzy of the current AI hype. Investors are just desperate to find the winner. But, as we're about to see, in this insane race to build the biggest AI brain, even the most hyped companies are walking a very dangerous financial tightrope.
Which brings us to the body at our crime scene, so to speak. Look at this damning admission from Elon Musk himself. XAI was not built right first time around, so is being rebuilt from the foundations up. This isn't just a quick pivot. This is a public confession of failure. The company behind the Grok chatbot, a company that Tesla literally just pumped $2 billion into mere weeks prior, has effectively collapsed as an independent entity. 10 of its 12 original co-founders have completely fled. It is a spectacular unraveling of a company that was originally supposed to be the ultimate rival to OpenAI.
Part 1. The first AI casualty.
So, you have to ask, how exactly does a company with Elon Musk's backing, billions in funding, and literally some of the smartest researchers on the planet become the AI boom's very first major casualty? To understand how a giant falls, look at this brutal contrast. Internal documents revealed that XAI was burning through $28 million every single day. They lost $1.46 billion in just the third quarter of 2025 alone, all while Grok's daily active users actually shrank by 12.5% in a single month. Meanwhile, their rival Anthropic's Claude chatbot was absolutely booming, driving Anthropic's revenue run rate past an incredible $30 billion. Basically, XAI was bleeding cash while losing the popularity contest. It was totally unsustainable.
Let's track how fast this actually unraveled. In January 2026, Tesla places that massive $2 billion bet on XAI. Just weeks later, in February, SpaceX acquires XAI, effectively converting Tesla's bet into SpaceX stock. By March, we see that massive exodus of the core founding team, and they're citing severe burnout and just a complete inability to catch up to rivals. And finally, in May 2026, Musk officially announces XAI is dissolved as a separate company, becoming SpaceXAI. The speed of this collapse is just breathtaking.
Part 2. The infrastructure trap.
So, what is the underlying motive behind our victim's demise? Well, it's the terrifying physical infrastructure required simply to keep the lights on and the servers humming. This perfectly illustrates the scale of the problem. According to the latest Artificial Intelligence Index report from Stanford, global AI data center power capacity has surged to an unbelievable 29.6 gigawatts. To put that into perspective, that is literally enough electricity to power all of New York State at peak demand. Imagine being the accountant having to open that utility bill. This exponential surge in compute and energy costs is the real hidden killer in the AI industry. If you want to play the game, you absolutely have to pay the power bill. And when you look at the revenue race, you can see exactly why XAI hit a massive brick wall. While OpenAI was pulling in a reported $25 billion annualized, and Anthropic was sitting at $19 billion in late 2025, XAI was severely lagging behind at just $428 million. You cannot pay a multi-billion-dollar infrastructure and power bill with $428 million in revenue. The math simply didn't work. They were completely caught in the trap.
Part 3. The Colossus One handover.
Now let's pivot to the smoking gun of our investigation. What do you actually do when your AI company dies, but you still own one of the largest supercomputers on planet Earth? You make a completely unprecedented transaction. I want you to physically manifest the sheer scale of this number in your mind. 220,000. That is the number of NVIDIA GPUs inside the Colossus One supercomputer down in Memphis. We're talking H100s and H200s, the ultra-rare, incredibly expensive engines that actually make AI think.
It is a crown jewel of computing power, originally built at breakneck speed just to train the Grok models.
But because Grok totally failed to gain traction, Musk essentially had an incredibly expensive, idle brain just sitting in a warehouse. So, in a major forensic clue to the current state of the industry, SpaceXI officially subleased all 300 megawatts of Colossus One's compute capacity directly to Anthropic. To stop the financial bleeding, Elon Musk handed over his single greatest compute asset to a direct rival.
Part 4. Profiling the next collapse. This massive handover forces us to shift our focus entirely to Anthropic. They are gobbling up compute at a rate that is, frankly, terrifying, and inheriting the exact infrastructure that just crushed XII might actually make them the next likely victim of the trap. Look at this evidence board. Anthropic isn't just relying on SpaceX. They have locked themselves into staggering multi-vendor infrastructure commitments. We're talking up to 5 gigawatts committed to Amazon AWS. They've committed $30 billion to Microsoft Azure. They have multi-gigawatt deals for Google TPUs, which are just Google's custom version of GPUs, and now they've bolted on SpaceX's 300 megawatts. The sheer scale of these financial obligations is mind-bending.
So the crucial point we really need to land on is this. A normal software company does not sign multi-gigawatt capacity deals. Anthropic is no longer just the clever chatbot company building Claude. They have morphed into a heavy infrastructure behemoth. They are burdened by a terrifying ironclad bill for future growth that they have to pay whether enterprise customers keep adopting their AI models or not.
Part 5. The contrarian twist.
Which brings us to a major shift in perspective. If you look really closely at the SpaceX and Anthropic deal, you might realize that the conventional wisdom about who is actually winning this AI arms race could be completely backwards. I want you to seriously consider this question. Who is really trapped right now, the landlord or the tenant? The market is hyping Anthropic to the moon with $900 billion valuations. But is Anthropic, the tenant, buried under hundreds of billions in compute obligations, actually at a much greater risk of a catastrophic collapse than the dissolved XAI?
Look at SpaceX's amazingly safe pivot here. By dissolving XAI and leasing out Colossus, SpaceX has essentially stepped right off the high-risk AI software treadmill. They are now just monetizing idle hardware. They have zero pressure to prove software margins to consumers. Plus, they get guaranteed lease revenue from a tenant, Anthropic, who is absolutely desperate for compute. In the middle of a gold rush, SpaceX stopped trying to strike gold and just started renting out the most expensive shovels in the world.
Part 6. The Investor Survival Guide. And this brings us to the climax of our investigation. With rumors swirling everywhere about an impending, massive Anthropic IPO, retail and institutional investors alike are salivating at the chance to buy into the next big thing. But, as we've proven, the infrastructure trap is deadly. So when Anthropic finally files their S1 prospectus to go public, don't blindly chase that $900 billion private market hype. You need a survival guide, and you absolutely must act as your own auditor. First, you've got to verify their gross margins, meaning, are they actually turning a real profit after paying for all that electricity and hardware? Second, carefully analyze those multi-year compute lock-ins we talked about. Just how heavy is that dead anchor? And third, confirm their recurring enterprise revenue. If it's just a bunch of one-off experiments by curious companies, the math will break.
And that leaves us with this final, truly provocative thought. As Anthropic takes the reins of the world's most expensive supercomputers, they face the ultimate test. Will they successfully convert this unprecedented compute scarcity into durable, highly profitable enterprise margins, or will they, just like XAI before them, be crushed under the terrifying weight of the infrastructure trap? The clock is definitely ticking, those massive power bills are coming due, and the entire market is watching closely. Thanks so much for diving into this explainer with me. Keep those detective hats on, and I'll catch you next time.